Hey, it's Michael Saul, but everybody calls me Tiny, so you can too for the last time in 2017. This video is, will 2018 look like 2017, plus 2 January effect stocks. This is stock market analysis for the week of January 1st, 2018. That's right, the year is over. For intra-week updates from yours truly, go to www.attackthemarkets.com. Put in your first name and best email address, then click the Join the List button. Then go to the email you used to sign up, look for an email from me, click on the link inside that email, which confirms it was actually you that wanted to join the list, and I will send you intra-week updates as they become available. Okay, so let's take a look what happened last week real quick. We'll just use the S&P for now, but of course we'll go through the indexes. So it was a little bit of a drift up, and then boom. Little end of year give back, very little, right? 0.38% down. So if that's the crash, right? I think this was the crash of the year. But if that was a crash, well, then it's no big deal, of course. And of course, it wasn't a crash, and it was just a monster year. Here is the year, and the rally started after President Trump was elected, of course. And it just kept going all through this year as well. There were some beautiful pauses, some textbook patterns to get on board, some zigzags, etc. And we didn't close at all-time highs, but we came close. So let's take a look at the numbers. And what I did here is I just pulled up the Wall Street Journal Market Data Center. And I'm just looking over here. I don't really care about what it did on Friday, obviously. So the Dow Jones Industrial Average, they were up 25.1%. Transportation, 17.3%. I'm not going to go through all of them, of course. Okay. Then if we go to the NASDAQ, you can see the composite was up 28.2%, but the NASDAQ 100 was 31.5%. All right. And then the computer index was 38. NASDAQ computer index was 38.8. NASDAQ insurance and NASDAQ banks kind of lagged. Okay, but you can see the NASDAQ 100 had a really nice year. If we look at the S&P, we have the 500 was up 19.4. The S&P 100 was up 19.3. This is not total returns, though, so added with dividends and stuff, it's a little bumped up. These are just the raw numbers, I believe. Here's the NYSE. I really don't care about the NYSE, but we can look at, like, biotech 37.3 and pharma, and the energy index was down. And then here's like the Russell 2000 lagged. You see here was only up 13.1%. Here's the bank index. This isn't the NASDAQ index. This is the bank index that we look at every week. That's up 16%. Gold and silver was up 8.1%. And semiconductors, wow, 38.2%. Clearly the leader, at least out of this list. Okay, here's actually Morgan Stanley High Tech is the leader, 39.4, but the ones we look at least, it was semiconductors. Here's the computer, 38.8. We don't really look at those indices. Maybe we should start, or sectors, I should call them, right? So it was a good year. And the question at the beginning of the video is, will 2018 look like 2017? And the odds are that it will not. And this isn't me getting all bearish and calling for a gigantic depression and a crash and a huge bear market. It's just when you have gains like this, and if you look back, I mean, this rally goes back a while here. You had the little blip back in 2009 down to this low, and then since then, I mean, this is just a huge move. Now, it's extremely hard to try to pick when confidence will just end, right? So on the downside, volatility is correlated with fear. So volatility will rise when there is fear in the air, and usually fear does not last very long. Okay, that some individual stocks we've seen have just fallen off a cliff and kept going, but in the market overall, usually fear is easier to gauge entries on than confidence. Okay, and right now there's a lot of confidence in this market. I don't care what the numbers say. I don't care, oh, well, consumer this and that. Come on, this is a monster move, and trying to pick the top is, in my opinion, silly. I read a piece this weekend that said, no, this is the classic sign, that was it, and we're going to go into a bear market in 18. Okay, I mean, maybe they're right. They're going to be right eventually, right? Calling a top. I'm not ready to do so. I think that at the beginning of the year, there should be inflows into the market. If we do dip at the beginning of the year, I'm going to be watching that for a buying opportunity for one more push high. I think we're going to at least 275, and that's not really a big prognostication. I mean, it's not that far away, 5 points on the SPY, right? But, I mean, I think we're going to get there at a minimum. I think we're going higher, but I would welcome a pullback. I would love to see a pullback to get on board. Okay? So that's what I'm looking at overall for the market. Now, last week I told you I'm going to look at some timing stuff. So what I want to look at here are junk bonds. And junk bonds are usually a good leader for the equity markets. And you can see here junk was making new highs in May. And right, if we look at the weekly chart, it's not new all-time highs, but that's irrelevant, right? It's making... well, if I go back to the week, you can see it's not even, forget all time, it's not even the highs from back here, but it's making relative highs, okay? And then all of a sudden it started making lower highs, but it did not put pressure on the market. Does that mean that high yield doesn't count? No, I still think it's worth watching, but that doesn't mean that we sit here and say, oh, look at this, junk is not confirming, let's just short, right? It's not a short signal, it's a condition. It's a condition to be careful on the long side, which there are a lot of conditions to be careful on the long side. New highs are a condition, right? Boom, spike up to new highs, a condition to be careful on the long side. Spike up to new highs, spike up to new highs. So it doesn't mean it's a sell signal, it doesn't mean it's not going to go higher eventually. They're just conditions to watch, and junk not confirming is absolutely a condition to watch for this confirmation, okay? You know my thoughts on crypto, but in case you're brand new to watching this, I just think that cryptocurrencies will demolish a lot more people than the internet bubble did, the tulip bubble in Holland and all that. Well, there's more people on Earth since then, right? So I guess that's not fair. I just think a greater percentage, because I think there's so much, the conduit for hype now with social media and everybody talking about it is just so much greater. And I know a lot of people that got hurt in the internet bubble. I know a lot of people that got hurt after 2008. And I think there's going to be so many people hurt from the crypto fire drill when people start running for the exits. I am not calling for a crash in Bitcoin from here or anything like that, but I still have not made a trade in there. I have not touched the futures. I've watched them. Definitely interesting. Definitely some people making money trading them, but there are also people losing money, especially with the futures. Remember, it's a zero-sum game. So if somebody wants to buy one, they have to have somebody selling it to them. Okay, if somebody wants to sell one, somebody has to buy it. So that's one of my predictions in 2018. I think there will be a correction in crypto. I also think that it will, and I'll talk more about this in my email. I'm going to start writing more emails. I haven't been really doing that many emails during the week, but I want to start writing more with my little mini tiny tirades, I call them. And one of the things I think is going to happen is one of these exchanges get hacked, or something happens and people get, just however much money is in there, they get wiped out because the money's stolen or something. And I know the encryption and it can't happen. Okay, we'll see about it not happening. Okay, or maybe it's one of these exchanges is a Ponzi scheme and they steal all the money, or they wind up reporting they're broke and it was all fake and it was never real and we never had the money. As soon as we got it, we took it out, whatever it was. Okay, so unless it gets regulated, I think that something like that is going to happen. If it gets regulated, then there could still be nefarious malfeasance going on. Wow, did I just say nefarious malfeasance going on? But it will be harder with somebody watching. All right. So let's take a look. I mean, the Dow looks the same. I'd love a pullback here. I think we're stretched, but I think it's going to be a buying opportunity. The Russell, which we saw, had the worst return for the majors. Still positive, though, and it's still not bad. You're probably pissed off if you were in the Russell instead of the S&P 500, but you still beat the living crap out of the bank, and you still beat the average, right? What's the average for the S&P? I guess it ticks up after this year, right? But what is it, 9-point-something% a year over the last 25 hours? So we're still up 13%. Still beating the average, right? You're not beating this year, but this year the S&P. But hey, you still did okay. That's the Russell. That's the mid caps, which we didn't get a number on. Looks like they did a little bit better than the Russell. And here is the NASDAQ, just a monster. Again, it's already started to pull back. I'd love to see a 50-day test. I think money will come in at the 50-day. Maybe it has to breach it like this and then remount it, whatever it is. I don't think it's, hey, just grab it at the 50, but as we approach the 50, that's the time to pay attention. Let's look at the SOX, which is off the highs, by the way, off 100 points off the highs almost, and still had a monster year. You know, this is not exactly the nicest looking pattern. Let's grab some, let's grab the trend line tool and see what we can do here. I mean, it's not a terrible pattern, but I would like it to be over the 50 and the 20. But let's see if it could turn from here and break. Want to watch those semiconductors. Here's Clat Tanker on a healthy pullback after it hit all highs. So just a pullback though, not a correction or anything like that. NVIDIA, which was the darling of the dance, that's lagging a little bit. Again, is this a short? I don't see the short signal, but not over the 50 days, so we always have to pay attention there. Here's Intel, right? Popped up. Now it's pulling back. Is this a 2B top? And it's going to go lower here? Well, I want to see this 4270 area get taken out first before. Again, it's not a short signal, in my opinion, from here. Let's look at the banks. The banks are consolidating up at the highs. Bank of America looks the same as the index. Here's JP Morgan. Here's Citigroup. Here's Northern Trust, and here's Goldman. Okay, so Goldman Sachs, technically a broker, but like to put them in with the banks. Pull back to the 20 EMA. Here is the broker-dealer index. Looks like the banking index. Here's Morgan. All right, how about biotech? So biotechs, they had a nice year in 2017. A little sloppy up here, but I don't see a sell signal. BIIB, I don't really see anything. Gilead, though, down below the 200-day. If this does not remount the 200-day and it gives 70, look for 2017 lows to be tested. Toot sweet. Okay, let's see if they'll get there in an expedient manner. I'm trying to expand my vocabulary. I don't know. Maybe I should eat the dictionary instead of freaking try to read it. All right, let's look at bonds. So bonds are still consolidating over here. Here's oil pushed up. Right into resistance. Let's see. We got up here 1250 area to watch for oil. Here's gold. So gold had a really nice week, and the miners are flirting with potentially trying to test 24. Like my friend Mike Swanson says, nobody cares about the GDX until it's over 24. So gold, yeah, this is extended, so I want to see a pullback here, but if it consolidates, it could rock and roll and go for those September highs. Let's look at some of the glamour stocks. Amazon, still in its triangle. The Apple, yeah, I mean, it popped up here, but now it came back. It's below the 50-day. Not a sale, but if it does pull back, we want to see what it does down at 165. The Alphabet, or better known as the Google, watch the 50-day moving average. The Facebook came out the downside of this triangle. Now it's in a consolidation here. How about Netflix? Yeah, Netflix spiked into the 50-day, couldn't really get above it. Tesla, still messy, more messy than anything. So I'm don't really see a pattern here. Got Caterpillar, has just been such a flippin' monster in 2017, and again, one of the old economy stocks, but look at it. I mean, there is no denying this has been an absolute beast. So let's see, what was it on the 29th? Let's see, so the 30th. Okay, so the 30th, 30th. Sorry about that. Okay, so 12:30. It was, where were you last? Okay, I don't have the last price. That's strange. All right, hold on. Maybe it's closed at the lows anyway, right? So, all right, it's 92.82, and it went up to, wow, I mean, that's a monster gain for Caterpillar. John Deere also just a monster, and it had the gift into the August-September window, right? This beautiful triangle we highlighted right at the 200-day moving average. All right, so definitely watching those. I mean, they're overextended, but watching those for pullbacks as well. So before I give the 2 January FX stocks, I just want to wish everyone a happy new year, except the Chinese and the Jews, right? Because the Jews already had their new year, and the Chinese new year is coming up. I always get in trouble for that joke, so I actually have to explain it. Yep, in the time of Facebook, you actually have to explain your jokes. Of course, I wish everybody a happy new year, right? What is this, the solar calendar or the lunar I don't know what it is. Whatever calendar we're following that has January 1st as the new year. Yes, of course, I wish everybody the happy new year. But I would like to see a pullback at the beginning of the year. Don't know if we're going to get one. I do think we're going to go higher. It does not look like a sell signal here. Of course, if everything changes and they just start throwing everything overboard and they spike it down, then we'll look for a continuation pattern. But right now, I think we're extended. I'd like to see a pullback, and I'd like to watch that pullback for a buying opportunity. So, January FX stocks, gave a list out to my private folks, but I asked if it was okay to give 2 stocks out. One of them is the obvious Adams one of the year, and that's GE. Okay, so one of what we look at with January FX stocks, one set of them are stocks that are beaten down, and GE has just gotten the living crap beaten out of it and hit the low, consolidate a little, then hit another low. So this is one to watch. Now, with these stocks, it's not just close your eyes and buy. Right? If you want to do that, it's your money. You can do whatever you want. But I would watch for a pattern to set up, or at least a breach where you can measure the trade. That's so important to measure the trade. Right? So maybe if it breaks that, and then you put the stop below the lows, and it is not a get rich quick, or it is not a this has to fly to 1 million. That's hype. That's what the stink breath super guru used to say all the time, right? And he banked everything on the January FX. It's just nonsense. They're just trades. Okay, so just watch that. I would be watching, and if it doesn't trigger, it doesn't trigger, right? Or you could just step in, use a stop based on a percentage of your portfolio, whatever it is. It's your money. Do what you wish. And the second one is the second type of January FX stock that I like to look at, which are patterns that are setting up for money inflows for the beginning of the year. And you can see this stock, CAV Networks, really nice move. I mean, this is the weekly chart, but you could see it was down here in the 20s, and then, I mean, 17, it was as low as, what's this low here? This is 17, right? Close enough. 16, November 16, it was $50, and then, it spiked up in 17. So now it is in a nice pattern. Again, I would wait for it to trigger. If it just dumps out of here, oh well, then watch for 50-day moving average. But you can see here, gap, consolidation, see if this can break 90, and what they say is, if you hit 90, 100's next up. So, of course, there's nothing that says that's absolutely the fact, but just something to pay attention to, right? Old Wall Street wisdom, as they say. All right, so long video this week, so my apologies. Usually I like to keep these to 15 minutes, so this one's going to be 20. Give me a thumbs up if you like what you heard. Write me at tiny@attackthemarkets.com. Don't forget to sign up to the list so you get intra-week updates. I am going to be sending more emails. Any questions, just give me an email, give me a shout, and I want to wish everybody a very safe new year, and I will talk to you in 2018.